everything you just mentioned is really what guarantees at some point that silver is going to be exponentially higher. Would you agree with that?
Yeah, and it can happen very quickly. I don't discount all this just collapsing in a matter of weeks where you suddenly see silver going into the 20s and then weeks later is at $50 an ounce and gold at 3,000.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics on Silverbug Central, which I guess is what our channel has morphed into. Although I'm darn proud of that because I think it's an exciting market, exciting times, even if the last day or two we've seen the price of silver get pummeled again, as often happens. Although, fortunately, to make some sense out of this, we have one of the finer silver analysts in the world joining me on the show today, which, of course, is Peter Spina of SilverSeek. And he has a gold site, too. We won't hold that against you, Peter. I mean, gold's fine and all, but he runs SilverSeek and very well versed on the mining stocks. And also, well, he was born in Denver, lives over in the Czech Republic, goes to all the conferences, knows just about everybody out there. So a lot of information, intelligence, access, relationships. And Peter, really appreciate you joining me today. How are you, sir?
Hey, Chris, great to be back on. I'm doing well, thank you. And as far as gold goes, I want to make sure everyone knows it's a nice big brother to have for silver because it does need guidance through these different and dangerous, difficult times. So love silver. Silver is one of my top positions for sure, physical silver bullion, and it's quite an interesting period right now that we're going through. So look forward to talking about that.
Yeah, and I know you're right, especially on the times when the precious metals markets are coming down. Then it's like, oh, maybe I should have gotten the gold instead of the silver. Although, I'm curious, maybe you can explain it to me. If the Fed was already printing unlimited, and I mean, God only knows what these gangsters are going to do next week at their meeting, but Powell has hinted at needing more aggressive action. I still can't figure out what is aggressive action when you're printing unlimited. But it makes me wonder, it's like, is there even really a plausible scenario in which the metals are coming down, giving how much money, not just out of the Fed, but around the globe, and it doesn't seem to be a stop to it anywhere ever? I mean, I'm curious how you see all that playing out.
And on the short-term action, I think it's just a reflection of how small these markets are and they can get pushed around very easily. So it's good to take a longer-term perspective and even midterm perspective on all of this. Silver has come back from nearly $10. It would have hit 11 something and during this vicious correction, which has only been several weeks ago now. And coming all the way back up to a key technical resistance right around $19, which the silver futures contract hit, I believe that was Sunday or Monday. So that failed, and then the traders kind of got bounced around there, and now we're correcting. Nice correction there, but I wouldn't be too worried at this point. I think you just keep accumulating on the pullbacks. This is a time to be adding to positions on these nice big down days. And you just hold on because every indication out there is showing that things are just going to get more and more wild on the monetary side, on all this new liquidity, all this money printing. Like you're saying, next week the Fed is talking about some new unconventional means. They're desperate to get money into the system. Powell mentioned that they are lenders and not spenders. So the spenders is the government, and they don't appear to be doing it fast enough. So the Fed's finding other ways to get money into the system, and we're buying ETFs and all sorts of stuff now. So what else is in that toolbox of theirs? They're creative, and I'm sure they'll find something else to do. But as we've seen from other places like in Japan, their ability to buy up the market is there, and they're going to keep pumping money into the markets. Which also, distracts people. It takes away from that fear component that everything is fine. They see the stock market rallying, the NASDAQ, records, we're close to records in other markets. So it kind of takes away from the precious metals a bit. But people people know what's going on. The people in the know, they're buying precious metals. The gold demand is extremely high. Tons of gold is being shipped over to the West and to New York. There's big buying in the ETFs and so on. So people are starting to wake up at least, and I think it'll keep continuing. So it may slow down a little bit here and there, but I think the trend is heavy accumulation starting in the West.
Yeah, it sure seems like it. And I'm curious, we have gold, what is around 1700, 1725 today. Got beat up a little bit the last 2 days, but at some point when it hit 1750, that was when it really clued into me. I'm like, wow, they were really not that far off from the 1900 we hit in 2011. And I'm curious, why do you think silver is still so low? Because, I mean, here's gold within shouting distance of its all time high, yet silver, not only a third of its 1980 high, or not of its 2011 high, but it's even a third of its 1980 high as well. Why do you think that is, Peter?
I think the relationship to the commodity aspect of silver, the industrial side, that has not been helpful. Commodities have been absolutely beaten down to record level lows as well. So that interest and that relationship hasn't been helpful. The retail investor has been absent, very weak for many years. Crypto took a lot of silver investors and took that following over into crypto, and a lot of people went in there, and some did very well. Many people did not, and that kind of distracted away from silver. So silver has been out of favor. With silver, just cratering in price when this COVID outbreak hit, that just really discouraged a lot of people. And suddenly, it's just whipped right back up to where it was pre-COVID, and kind of catching up to where it should be. And well, I think it should be a lot higher, and it will get there soon, as gold keeps rising to new levels. But yeah, I think we just got to give it time. And silver's gonna get a lot more interest here. I think you're seeing copper starting to move up. You're starting to see industrial demand come back as well around the world from this huge shutdown. So there's been this pent up demand. But there will be some industrial slack because there is a huge part of the economy that has been destroyed. It's going to take a while to rebuild there. But I think investment demand and retail demand is coming back, and that's really what's going to be the price driver for silver.
Although, Peter, I like to be respectful to my guests, although I'm going to have to disagree with you here. Maybe you didn't hear the economy is actually fine and great and strong here, as we've been told, not only by the president, but the NASDAQ, which is now, I believe I saw an article this morning, it's now back in new all-time high record territory. Who's buying all of these Teslas and all of these other tech products where it doesn't add up, where on one hand the market was destroyed and people are out of work and jobs are closed down. I mean, some places you can't even go out to a restaurant, yet you have the tech stocks again just soaring. Any thoughts on that?
It just seems like it's surreal, doesn't reflect the reality of the situation. I think that general markets and everything, they're just kind of running up on this hopium right now, being pumped up, with the cheap credit, the Fed, the general just speculation. It's a casino. And I think there will be a correction, but overall, I don't think it's gonna, plunge and go down. I think what happens is they're gonna keep preventing any sort of correction from happening. Sustain one. There might be these periods where it starts to collapse, and we've seen this many times now in the last few years, where the markets collapse and it comes right back up. So they're just going to keep printing trillions and trillions and trillions and pumping it into the system, into the markets. That's obvious. So they're debasing the currency, which eventually, means that the prices have to go higher to reflect the devaluation in the dollar. So I wouldn't be surprised that we get a pretty nasty pullback in the summertime, as there is an economic realization, the loss of economic activity that's happened from the shutdown, and these various sectors really getting hit hard. That's sustaining. So people will kind of wake up to that, but then again, they'll just keep pushing back and pumping the system and the markets with money liquidity. And again, it's not a market; it's all fake now. So
Yeah, that's a great point, Peter, because I know people talk about whether we're going to have a V-shaped recovery. And to me, it's like a guarantee we're not going to have a V shape. We're not going to have either leg of a V shape. We didn't have a recovery before. We don't have a recovery now because it's all fueled with printed money. Take that away, and then we'll see whether we really had a recovery or not. And along the lines of what you just mentioned, is it safe to say and even guarantee now that the Federal Reserve will never raise interest rates under this financial system?
it's impossible. I don't see how the rates really can go up much. Obviously, the debt's gonna just skyrocket, balloon. We're gonna be at $30 trillion maybe within a year or so in the national debt. That's outrageous. How did they raise rates without everything just starting to collapse? They're stuck. It's catch 22. So deflation's either inherently deflationary. That's inherently deflationary. So the other tool they have is inflation, and just to print the living heck out of everything, and that's what they're going to keep trying to do. So it's it's impossible to raise rates. That the whole system is just piles and piles of debt. So it's impossible to see that happening.
Yeah, which is also inversely really the best. I mean, there's a lot of good things I think going for silver, but I mean, you could say Jerome Powell is the silver bug's best friend because we've learned, all right, certainly if you need money the next quarter or the next month, I wouldn't tell anyone to buy silver, but for people who have a long-term perspective, that everything you just mentioned is really what guarantees at some point that silver is going to be exponentially higher. Would you agree with that?
Yeah, and it can happen very quickly. I don't discount all this just collapsing in a matter of weeks, where you suddenly see silver going into the 20s, and then weeks later is at $50 an ounce, and gold at 3,000. There's so many things going on and converging and destabilized, and it's obviously a very difficult period and for a lot of people, and jobs have been lost, and people are angry, and there's social unrest, and there's global issues, and there's trade issues, and all sorts of things going on. So on the monetary side, they're just going to keep printing money globally, not just dollars. Obviously, they have to print a lot more dollars because there's a huge dollar shortage globally. So Fed's feeding money out everywhere. They're feeding it to a host of different central banks around the world, and then domestically, they're feeding it to the government. And the politicians, people will keep voting for them to spend and supporting that. And anytime there's a problem, people are clamoring for money. So they keep raiding the treasury basically, and they keep having to issue more and more debt. So Powell has been pushing the government to spend more, and they will have to, and they will. They're scared. Obviously, the social issues are a reflection of the economic challenges and the big divides that we see in the United States, which is a result of the policies that they've been instituting and they've created themselves. But obviously, they keep making the issues bigger and bigger and bigger, and nothing gets resolved. It just gets more dangerous. So that all plays into the benefit of precious metals, and the basement of the dollar and all sorts of global currencies is going to happen at a very aggressive rate in the next year, 2 and 3, and so on. It's quantitative easing, ongoing, forever, infinity, whatever, whatever it's called.
Yeah, and as you were mentioning Powell there, reminded me, I don't know if you happened to catch his 60 Minutes appearance. What a whopper that was a couple of weeks ago. Although I'd love to hear your thoughts when he came out and said that this is different from the 2008 crisis because prior to Corona, the economy was strong, everything was just great. But why was he lowering interest rates and doing repos for? I mean, the interest rates started. I forget when exactly they started cutting. A couple months earlier, and then back in September, the repo line. So
Yeah, they started a quantitative easing program secretly on a Friday afternoon. That was a $500 billion program to last 6 months, and it went from quantitative tightening to quantitative easing very quickly. Rates being cut, like you said, and then COVID hit, so it was a great excuse now to just flood the system with what they were going to do anyway, in a maybe a more measured manner. But everything just got accelerated forward with this mess, and things just really got exposed very quickly. So the leverage in the system, all the debt out there, there's a lot of issues out there. There's going to be a lot of bankruptcies and lot of losses going to be figured out here and showing up. So they're in a difficult position. You know, they're going to have to keep spending and going more and more into debt. The country's going to go deeper into debt, and I just don't know where this all ends. You know, can they buy themselves another 10 years by keeping rates at zero and printing trillions and trillions and trillions of dollars, and then we have to pay for it then? Or is this the end game now in the next couple of years? Is it unraveling as we speak right now? But I think there's so many other things that are happening in a positive way with advancement in technology and other things, and that are, more powerful than the mistakes of the politicians and the Fed. So you've got other forces at play as well. So it's on the economy side. I know there's some positives there too, so we shouldn't fully discount it. But boy, there's a lot of problems and a lot of industries that have a lot of need for help, and the Fed and the government. And it's obvious that this is a lot different this time, and that they're going to have to do a lot more to fix it. And they're willing to take all sorts of measures. And like Powell said, they'll ask questions later. So better to make the mistake by overspending and creating too much money now and deal with the consequences later, than to underspend and under add too little liquidity into the system.
Well, yeah, that that was another comment Powell made that I thought was interesting. I was saying, well, there's a time to pay the money back, but it's not now. But I was wondering if he was actually reading the same speech that Bernanke gave 10 years ago. And wouldn't, if the economy was so strong for the last 10 years, wouldn't that have been the time to pay it back? But I mean, really, the Fed's been saying that probably since their inception 100 years ago. Um,
Yeah.
so, Peter, I guess, I went to a public school here in the US, so maybe I'm a little slow. But I mean, when you add up everything that you just said, and then you look at how small the silver market is, I mean, it seems like almost at some point there's going to have to be a stampede in there. So I'm wondering if perhaps you could put in perspective, for people, just how small silver is relative to gold, and compare any other market you want. And also, I get the feeling, and I know you talk to a lot of fund managers at these conferences, that still maybe it's changing a little bit. I know the financing environment's been a little better, but um, it seems like a lot of people are hesitant, and it's almost set up that they're all going to be piling into this small market at the same time. So, any thoughts on that?
Yeah, well, you're a market with several 100 million ounces of silver ounces a year. Uh, Investment being a very small fraction of that. So if you say 100, 200 million ounces of silver, that at 17, 18, $20, we're talking just $4 or $5 billion. That's nothing. If you get even the minimal amount of interest from general public into silver, get billions of dollars looking for an escape from the debasement of the currency, place to hide from that. Silver will explode. It's nothing. It's a tiny market in relationship to the amount of money being created, which is absolutely insane. So um, the, the amount of money, trillions and trillions of dollars being created on a hourly basis is probably more than the entire silver market is, in size. What they create in debt in a matter of half an hour, I don't know, minutes. I'm sure it's ridiculous. It's just a tiny little place. And same with gold. The amount of gold that the U.S. has in its reserves probably is equal now to the amount of new debt they created in a matter of a week or days. It's ridiculous. They're just
I'd
yeah.
guess the amount of gold that the U.S. has in its reserves is probably close to the amount of gold I have in my reserves.
Yeah, which is more than Bank of Canada, but still quite low. So who knows? It's not. It's the size and the proportion. Everything is relative, and in the relationship of dollar units and euros and won and yen, it's just obvious that the trend, which we've been seeing for a very long time, is that gold is going to keep trending higher, and silver as well. And the silver gold relationship really expresses the value of silver right now. So it's hard not to be just accumulating silver. Physical silver. I love the Silver Eagles. I love buying the different series and years. In the last years, there were very few. I mean, it was like a 10-year low for Silver Eagles the last time I bought a box. That was maybe a year ago, and that was not. That was very low interest. So the premiums on some of those products will probably do quite well when the interest returns. And I like silver because it's got an industrial component. We need an electronics and all sorts of, the intrinsic value of silver is quite high. And then it has a monetary, it expresses that component as well. So in a situation like this, it has both those components. So I know from the long term, I can store my wealth in silver. It's a store of value. It's an excellent store of value, low risk and great upside, opportunities. So I've been buying silver since I've been a teenager, when it was $4 in college, when people were going to debt buying clothes. I was putting my money into silver, and I just love saving in it. And it's something I see as generational. You can hand it down, and that's the key. Is like, where do you put your money? You're going to put it in a bank, which gives you 0% interest rate, at a bank that lends its money out with 0% or near zero reserves. So, it's insane. So I think people are waking up to the risks that exist out there, and people don't want risk. They were looking for a return before, and now they don't want risk. And gold and silver are great, especially at 0%. Before, the argument was, why do you want to have silver? Why do you want gold? It doesn't give you a return. Well, then take it to the bank and do what with it? So on that side, that's interesting. And then I believe you mentioned on the equity side, was there something on silver stocks or?
Yeah, I'd love to hear. Although I'm kind of giggling here because as you're saying this, I'm like, gee, I want to go buy some silver. It's a good commercial you're giving. But yeah, that was the last thing I wanted to touch on with you. I mean, I think that's really your area of expertise, or one of them anyway. The silver stocks. Obviously, we have a lot of folks that are into the silver stocks in our audience here. So any thoughts you have there? I get the feeling maybe it's changing a little bit, but that there's a lot of that group think. Well, I don't want to invest in silver stocks now. If they get pummeled and I'm the only one who does it, then I look bad. Whereas, once everybody piles in, at least you have I'm not saying that's necessarily a great way to invest, but I think is still what often ends up happening. So curious what you've been hearing about the environment for the equities in silver.
Yeah, it's getting more favorable. Well, first of all, the best advertiser, like you said, for silver is Powell and these gangsters who are just absolutely destroying the currency. So that's your biggest cheerleader for silver. The silver equities they got destroyed with the general markets when that sell-off happened last couple months. It was amazing. You could buy things that were just absolutely on fire sale, and they may not be as cheap. There may have been a nice run up, and there might be a little bit of a consolidation here. But for me, I'm mostly just all in, waiting for the big run here, because I do trade. I do trade maybe 10% or so of the total account at this point. So I try to play it. $19 silver was a bit of an obvious resistance point. So I took some money off, and now I'm starting to rebuy the equities. I think they're showing nice strength. They're obviously very sensitive, though, to the silver price right now. Silver breaks 19, and then if it really gets going over 21, these companies are just going to absolutely take off. It looks like we've had some nice gains now, but wait for that to happen. A lot of binds and a lot of projects, and there's a lot of mines with deposits that could be expanded very quickly if silver gets into 20s, or there are mines or projects that become viable again as silver goes up. And then just in general, for a company who's mining silver at 15, 16, 17, 18 bucks and breaking even, the leverage they have to the silver price is very high. So they might be making $1 or $2, and they might soon be making $10 a share. So all of a sudden, what other sector is giving you a 20% growth in cash flow and profits or more or whatever? I mean, this is turning into a nice growth sector. So if silver just holds up around here for a while, builds a nice base, pumps, jumps into the 20s, 25 could come very quickly, and then that's a whole different, you'll see a very quick revaluation. So it's hard to get into the sector when it's weak and beaten down, but then you can really, you can join the ride up, but you might be buying right near when it doubles, triples, quadruples, and be taking, quite the risk at that point. So you got to be careful in the short term when these things run up very quickly. But from my perspective, you just accumulate the weakness, and if you want to, you try to play that volatility, because the volatility in the sector is quite amazing. It is jumpy. Some stocks are moving 10%, 5%, 15% in a day. So you can try to play that, but it can be quite emotional.
Yeah, I appreciate you mentioning that, because it is a very non-standard distribution, and I'm a fan of accepting things as they are, and planning around that appropriately rather than what I think or hope they should be. Although along those lines, I'm going to leave you with something. This is a little unfair, Peter. I hope I don't get you in trouble with the missus tonight if you're daydreaming about this during dinner and she's saying, Peter, how come you're not paying attention? But if she does, you can let her know that in Doug Casey's 1979 book, Crisis Investing, he mentions from 1962 to 1968, the average penny silver stock moved upwards over 150 times, not percent, 150 times in price. One went up over 1,000 times due to a mere doubling of the price of silver and the speculative fervor on the part of investors. So to what you just said, hey, maybe we have to wait 30 years at a time for one of those moves. But gee, it sure seems that, well, when you just look at it, if they're in a world where patience is hard to come by and you can have patience, there's probably some edge there. And Peter, I appreciate you joining me. And perhaps just before we wrap up, you could let folks know a little bit more about what they can find on SilverSeek and GoldSeek, because I know you do talk about the stocks. You have a lot of great articles. You even post some of our silver videos up there, which I'm quite grateful for. And there's sites that I enjoy going to and I think people would like. So could you share what people can find there?
Sure. Thanks, Chris. It's great to be back on and share some thoughts. It is a sector that does not always do so well, but when it does well, it does very well in these periods. So I think we're in one of those periods now, and one of the best opportunities that I've seen. And I've been watching this since I've been a teenager. So I've been interested in junior mining for a long time, and we do cover that on SilverSeek.com and GoldSeek.com, which is going to be 25 years old come August. And in preparation for that, we've been spending a lot of money and time updating the back end of the site. So we just relaunched SilverSeek, brand new platform site, and we're just making the final touches to get that running smoothly, and then we'll take GoldSeek live. And so now we're able to host such quality content as yours, Chris, and we appreciate that. So yeah, come to silverseek.com for the latest on the silver sector. And we do cover the silver mining equities. We've got Chris Marquise now joining us and covering that on a real-time basis to help investors navigate it, because it is quite difficult to follow everything that's going on. There's a lot of activity, and you are seeing a lot of interest into the juniors now coming, and it looks like a lot of financing and capital is starting to be thrown at their way, which is excellent, because there are a lot of exploration companies that have had to been dormant and unable to advance some nice, interesting projects, because there hasn't been a lot of capital to go after these things. It's a very capital intensive business to get a project even towards development stage, and then into development. It's very, very capital intensive. So it's good to see that coming back. So that'll really get things going. It'll be nice to see some, hopefully some nice big discoveries start happening from that as well in the coming several months, year or two. So it's an exciting period to see the sector revive. And so I look forward to coming back and keeping up to date with what's happening.
Yeah, I appreciate it. It's a great site, especially I love the blog where it's kind of like Zero Hedge, but you can filter out all the non-silver stuff that no one who cares about it. It's not silver. And Peter, I won't give away any secrets. We talked before we hit the recording about some ways to get more involved there. So folks, I really suggest checking out silverseek.com. There's a lot of good info there, and hopefully you enjoyed hearing from Peter. So Peter, pleasure as always. I hope to catch up with you at one of these conferences soon, or maybe you'll be back in Denver one of these days. But always a pleasure to talk with you, and we'll look forward to doing this again soon.
Likewise, hopefully they let us out of this country at some point. Maybe they'll open the borders up in the next several weeks. So hopefully get back and make a nice visit to Colorado. And well, hopefully we get to conferences coming back as well soon. Look forward to catching up with you in person. And until then, yeah, we'll have to catch up over the podcast. So talk with you soon,
Yeah, and
Chris.
somehow silver will fix it. I don't know how just yet, but any problem in the world, I'm counting on silver. And folks, if you would like a little more explanation of why some of these things are happening and what's actually happening on the physical market, well, coming your way is last week's call with Andy Schechtman, and you can click on that right now.